I realized that over the last 25 years, I've been getting a solid 3% return in my 401k. Three. And I saw that number and I'm like, oh my God, I'm done with this. Forget this. I am not doing this anymore.
I frankly couldn't see how I was going to save myself to any kind of retirement. I had these flashes that I was going to be a door greeter at Walmart in my 80s.
I want to get some passive income, basically find a way to have my money work for me instead of me working for my money. And so real estate's one of those great ways of doing that. I like having the freedom of doing things when I want with the real estate. It gives you a lot more freedom to control your schedule. They don't teach anything about managing money. Zero. They don't teach anything about retirement. I mean, what are taxes? You don't even know. You figure that out on your way through. My gosh, I haven't even looked at my retirement in 15 years.
Blaine McLaughlin joins me here today, and you can get access to a free tool. Head over to CanIRetireCalculator.com. That's going to be a clickable link in the show notes.
Hey, thanks, Jack, for having me on. Hope I can help somebody.
But let's start with why you created CanIRetire.com. It apparently ties to your origin story of getting into real estate investing.
Yeah. So I'm a dentist for many, many years. I've been doing dentistry almost 30 years. I met some buddies and we still hang out a lot. And we started talking about retirement a few years ago when our kids were getting to the college age. Once the kids get into college, we're empty nesting. And then they get out of college. It's like our financial obligations, since we're willing to help them through some college, decreases a lot. I'm starting to look at my retirement, and a few years ago, I'm like, gosh, it just doesn't seem like that. There's that much in there. And, so the standard 401k that a lot of people have that I've been putting money in for decades, doing what I was supposed to do. I was told, hey, put your money in here and it'll roll over, and interest and compound interest is the key. Right. And by the time you're ready to retire, you'll have this huge amount of money and everything's grand. Right. And so I'm looking at this going, well, this doesn't look so grand to me. I don't think I'm gonna be able to retire on this and live the lifestyle that I want. And so I started doing some calculations going, what's going on here? And I realized that over the last 25 years, I've been getting a solid 3% return in my 401k. Three. And I saw that number and I'm like, oh my God, I'm done with this. Forget this. I am not doing this anymore. That's not what I was told. That's not what everybody tells you. They're talking, the market goes 8 to 10% a year, on average, and tell you over the last 25 years, the market's done pretty well. So there's a lot of hidden costs and stuff that, I found out I had, and I'm like, I got to do something else. And so I was talking to one of my dental school buddies, and he kind of realized the same thing. And he's like, hey, we got to do something. I got a friend of mine who's going to a real estate conference. Are you interested in doing apartments? Maybe looking into investing in apartments. And I said, yeah, I've been doing it for years, just kind of on the side. I said, I'm definitely in. I want to learn this stuff, and I want to help other people and prevent going through this situation that I had to go through. So I started digging into real estate, how to invest in multifamily apartment complexes and short-term rentals and stuff like that. I'm here to help other people. And that's where I came up with CanIRetireCalculator.com. It's something anybody can look up. And it's just this little simple thing. You put in some numbers and it'll help you find out where you are in your retirement process as far as financially, how you're doing. And it can help you plan for the future. So that's my story.
Yeah, it kind of a similar story. I was in the tech industry, and my buddy and I would, over our lunches, have similar conversations because I frankly couldn't see how I was going to save myself to any kind of retirement. I had these flashes that I was going to be a door greeter at Walmart in my 80s.
That's a retirement plan.
Yeah, I just couldn't see how it was possible. And then, I had a 401k, but then I had IRAs and stuff with a financial advisor. And it looked like the majority of the money there was simply helping pay that person's salary. It wasn't growing at all.
Yeah. You don't hear a lot about the hidden costs of making transactions and doing stuff like that. The company that was in charge of my retirement for years, and this is what they do. This isn't like my neighbor down the street who does it on the side. This is like a giant company across the world. And this is what they do for a living, 8% growth. But then there's this fee here and that fee there. And then you got this going on here. It didn't turn out how I wanted it, I guess. So I had to
Yeah.
change gears.
So, do you still practice your dentistry now?
Yeah, yeah. Obviously, in dentistry, we're trading time for money. I have to be there physically doing stuff. And so that's something that I can't do all the time. I mean, I can continue to do it, but we're in a weird position. I don't know if you ever see a dentist sit there. We're all hunched over and stuff like that. You do that for 30 years, it starts to take its toll on your posture, your back, and stuff like that. I got so many things I want to do. I want to give back to the community. I want to travel. If I'm having to work all the time, I don't have the option to do that. I want to get some passive income, basically find a way to have my money work for me instead of me working for my money. And so real estate's one of those great ways of doing that. And so that's why another reason I got involved.
Sure. Well, with you having a full-time practice and now doing this on the side, what has been your biggest challenges when you've been adding real estate investing to your workload?
Oh, well, as you can see, time, right? Luckily, I do have a partner that has joined me in my dental practice a few years ago, and she's fantastic. So she takes a lot of the daily activities. So there's some times where during the day or over lunch, I'll sit there and look up stuff on the internet or underwrite a deal or make some phone calls to some people. But time is huge. And I do find that most of my investments are out of state. So I live in Iowa, and Iowa is a wonderful place to grow up and raise your kids. Iowa's not probably what I would consider an ideal place to invest in real estate. I mean, most people probably would agree with me without even looking that up. But so I invest out of state, and when you're not present, it's really, really hard to get things done and to make progress. I'm trying to fly to different places so I can be on site or tour this or tour that to get an idea of what I might be getting into. But not being able to be local has been very difficult, along with the time factor.
Being with that you mentioned earlier that you, as a dentist, you're trading time for money. Was there any other mindset shifts you had to go through when it came to your real estate investing?
Yeah, I mean, I've been doing real estate for actually quite a few years. And I got into it right out of college and had a local buddy of mine work with me a little bit. I invested in some stuff around here and it just didn't pan out and didn't go. So I thought, you know what I need to do? I need to just invest in my dental practice because that's what I do and that's what I do best. So I kind of just fiddled around in the real estate on the side a little bit. And so I really put my dove right into my practice and the practice is doing great and it's got a great reputation. And like I said, now I got another dentist. So having that control and building that was awesome for me. Now I have to back off and I have to let the next round, my partner, let her take over. And so I've been teaching her, but I've had control of this thing and I've been running this successful practice for decades, a couple of decades, right? And now it's like, oh, I got to shift gears and step back. And so again, that's a big shift in mentality going, nope, I've been teaching her for years. She knows what she's doing. She can do this without me there. And I can pursue my retirement job, which is a little more passive, the real estate thing.
Mhm. You mentioned having a partner, but
In the office, it's not as
in
passive as
your real
my
estate.
real estate. My real estate, they talk about passive income, and that's kind of a misnomer, right? I mean, that's not exact. I mean, you can. It depends on what you want to do, right? I mean, you can be a limited partner in a deal and put your money in, and that's what I've been doing for 20 years with my buddy who's local here, but you have no control over it, right? And so if that's what you want to do, that's great. And if you find the right person and trust them and like them, then you can be very passive. But I'm wanting to be a little more active. So, when you say passive income, there's a lot of action that goes into this. And, I've been working on this for years and educating myself and going to seminars and underwriting deals. But the big difference between that and dentistry is that I can do this on my time. I can underwrite a deal at night after dinner. I can travel on a weekend. I can travel during the week to go visit a place or see a deal where dentistry is scheduled 8 to 5 every day. I like having the freedom of doing things when I want with the real estate. It gives you a lot more freedom to control your schedule.
You mentioned going to that initial seminar with your buddy. what other stuff did you ingest to get things going?
Oh gosh. I mean, like most people, I've read a ton of books on real estate, mostly focused on multifamily real estate. I'm now getting into short-term rental. We're closing on a short-term rental deal actually after we get off this podcast. So yay for that. My whole phone is full of podcasts and it's all real estate, this, real estate, that, real estate, this. And there's so much you can learn from other people. And again, that's one thing, that's why I'm here today is I'm trying to help other people out there prevent that 3% mistake. And maybe I can teach them a little bit or inspire them a little bit to get out there and take the action that they need to do to start a real estate business.
Yeah, you said the 3% mistake. We've been taught or trained, maybe it's a little brainwashing that it's one of those things you were supposed to just set it and forget it. Like it'll just all shake itself
Yeah.
out in the end.
And as far as dentists and physicians and all that stuff, I mean, they teach us how to take care of people. They don't teach us how to run a business at all. And in dentistry, when I want to practice, I run a business. They don't teach us anything about managing money. Zero. They don't teach us anything about retirement. I mean, what are taxes? You don't even know. You figure that out on your way through. It's crazy how that's been so left out of the curriculum and that's so important. And I mean, it should be taught in high school. People should know what a W-2 is in high school and stuff like that. I think that's missing in the school system. And yeah, we just had to learn on the way.
Yeah. I hate to be a conspiracy theorist, but it seems like it might be all by design.
Well, Jack, I tell you what, I'm not totally against that thought either. I think there may be some planning there.
Yeah.
By
So
somebody.
could we start with talking a little bit about how you started your first multifamily investment?
Yeah, well, so I went through, like I said, I've been doing this for years. So if you want to talk about the very first one, I read Rich Dad Poor Dad, and that's, I think, one of those books that everybody reads if they get into real estate, or they should. And so I'm like, wow, this is totally different thinking, right? And so I talked to my buddy, and he's like, okay, what we're going to do is I buy these apartments, and then the cash flow is usually pretty good. And so he's like, we'll go there's a 20-plex for sale. We're going to get like 5 people together. We'll pool our money. We'll put our money down for the down payment. He goes, I'll run it. I know how to manage these things. Right now, here's what the rents we're getting. And this is the expenses. So cash flow is about 10% on this property right now. We get into it. That's probably what you can expect. I'm like, well, that sounds pretty good. I'll take that. Not to mention there's tax benefits, which some people don't know about, huge tax benefits. There's appreciation, right? Typically if you have a loan, the tenants are paying your loan off. So that's great. So not only do you have the cash flow, we get other avenues of income as well. And so we get into this and, a couple months go by and, I'm like, okay, how's it going? Well, things are going pretty well. I said, do we get any distributions here or, what's happening with that? And he goes, well, we had a couple people move out. And so occupancy wasn't quite where it needed to be. And then somebody moved out and they really tore the place up. So we need a new carpet and had to do a bunch of repairs on the walls. So we don't have any cash. And I was like, gosh, this isn't how we planned for. And so the thing one of the things I've learned is that there really wasn't much of a plan for any issues, right? I mean, here's the income right now. And if everything goes perfect, yeah, you'll get this money. But if it doesn't, you won't. And so that was my first experience with real estate. And so I was in the deal for a while and, eventually we sold it and we got out and didn't really make a ton. But when I went to the seminar a few years ago, they're like, here's what we need to do. And they had a plan from start to finish and how you're going to add value to the place, how you're going to make it. And what if something goes wrong? Because, something will go wrong. There's always something that goes wrong that you can't predict. And this is what our plan is, our contingency plan for this and this and this. And they walked you straight through the whole process of, before you buy it, finding a property, buying it, adding the value, and then selling it. And it was like, oh my gosh, this is crazy. This is why all these other deals didn't do as well as I wanted, because this wasn't in the plan and this wasn't in the plan. And so it got me really, really inspired that the planning is in place for most of these deals I'm in. So the ones I've got in recently, have people that are running them and the plan's pretty well laid out. You know what's happening. Do things go wrong? Sure. Interest rates, what have they done the last couple of years? Yeah, they've kind of messed up some deals. Insurance hikes have messed up some deals. Property taxes, for some reason, in a lot of places are skyrocketing for unknown reasons, just because the government can, I guess. And so all those things have kind of, have slowed these deals down that I'm in. But that's a little history on what I've experienced recently.
Just to remind everybody to take advantage of what Blaine has offered you here is go to CanIRetireCalculator.com, CanIRetireCalculator.com. This show only grows if you take a second and share this episode with one of your real estate investor friends. So please consider doing that if you found some value so far. And if you're watching us on YouTube, give us a quick like and subscribe. So based on those experiences, Blaine, how has that shaped how you invest today?
Well, again, I talked about the plan. And so that's huge. When you underwrite these deals, when I say underwriting, basically you're finding all the numbers on the deals and you're putting your calculations together on what you think the cash flow is going to be and that kind of stuff. You got to be pretty conservative. You got to plan for the unexpected, because you shouldn't expect something unexpected to happen. I mean, just the multiple properties I'm invested in now have all had something like that go on where, maybe it's 100 units and you got a building that's 8 units and there's a fire, right? And so everybody has to move out. That's happened to a couple of these. And so you don't expect that stuff, but it's planning ahead and making sure there's a goal at the end and there's an exit strategy and having all those in place. The underwriting that we do is pretty conservative when I'm looking at these deals. And I tell you what, you look at a lot of deals. There's a lot of, I mean, you're not looking at 2 or 3 and going, yeah, I think I'll take 2 out of these 3. I mean, you're looking at 100, because a lot of times the sellers don't want to sell. They want to sell it obviously for as much as they can get, and it doesn't pencil out. And it's a lot harder now than it was 3 years ago when real estate market was, at its peak, I think. And people were like, you could trip over yourself and still have a good deal. Now it's a different ballgame with the interest rate hike, and then you throw tariffs in. It's like, who knows what's going to happen there? So planning and being conservative is important.
Yeah, imagine looking at some of the performers out there right now, it's almost sci-fi or fiction. They paint these beautiful, utopian, perfect property details, and it's far from it. You really got to make sure you dig into the actuals.
Yeah. And that's one of the reasons where I'm looking at, I'm a limited partner, which is considered very passive in most of these deals, although I try to be fairly active at finding out what they're doing. But I invest the money and then other people are running it. But I'm working on becoming a general partner where I can be kind of in control of running and managing this. I've been doing that for years in my dental office. I have a multi-million-dollar practice, as you said. So I can do a pretty good job of managing people, managing a business, and seeing where the cash is going or what needs to be done and how to organize that. So I'm looking to be a GP sometime soon.
So are you still pretty much primarily focused on multifamily, or are you adding anything else to the portfolio?
Yeah, it was mostly multifamily, and it's called value add. So you'll buy something that is 30, 40 years old that needs to be rehabbed. You could purchase that, and you have the carpet in the living room and the white appliances. If you put some stainless steel appliances in there, put some nice flooring down, vinyl flooring or something like that, you can increase the value. People will pay more for that, right? So they'll pay another $100, $200 to rent a nicer place if you're in the right area. And then again, that adds the value to the property. And that's kind of the ticket. So that's mostly the multifamily that I'm in. As I mentioned before, I'm doing a short-term rental. Short-term rentals are, if you're, again, got to have the right place, location, are supposed to be really good for cash flow. And so again, as I look into the cash flow so I can work my way out of dentistry, I need some income coming in. So I'm hoping these short-term rentals will provide a stream of income that I can, feed off of.
So let's take a step back. Like, now that you've been in multifamily investing, how is your retirement looking at the moment?
Well, most of my stuff, and again, we got into it to build wealth. And so in order to do that, you have to go full circle, which means, the property is purchased, the value is added, examples of what I said before, and then they sell it. And if you sell it, then you get your income back. Well, none of these have been sold. So you're like, how's it doing? Well, they're all still there. So that's good. They were all planning on about a 3 to 4 year turnaround. And with the way the real estate market has gone the last couple of years, I think everything's delayed. And so people are like, oh, is it all roses here and candy canes or whatever? These 3 year deals are going to turn into 5 or 6 year deals. And so I was hoping to have some income now. Well, none of them have sold because it's not a good time to sell. And so they're holding on to them and continuing to do the wealth building. I think in the future, things are starting to level out, in my opinion, as far as the real estate market goes. I think we've been through the worst part of it and it's starting to roll again. I think we're going to see some rent increases coming up here in the next year where we haven't for a couple of years. Supply is way down this year compared to last year. So that's going to provide a little more demand and rents will be able to hike up. I think vacancies or occupancy will increase as well. In a couple of years, I think we're going to be doing just fine.
Well, if somebody is thinking about getting into multifamily investing, where would you suggest they start or consider?
Well, I mean, number one, I say you got to educate yourself a little bit on this, right? Because I did it when I wasn't educated right out of school. I told you that those first few deals I was in with my buddy didn't work out well. So, you know, keep in mind there's always risk in all these things that you do. The benefits can be huge, but the risk can also be pretty substantial. So do some education, either go to a seminar, read some books and that kind of stuff. You can, once you go to CanIRetireCalculator.com, you can get a hold of me and, there's ways to get a hold of me and I'd love to sit down and have a chat with you and talk to you about what I have going on. I put in some bids on some deals here recently. Didn't get them, but we're going to keep trying. Got some things working in the fall. Another investment that just kind of getting started that I'm going to be involved in. Educate yourself. Let me know. I can help you.
You've brought that up a couple times. It seems more and more like it's a numbers game where you got to make sure you're looking at multiple deals, submitting offers, and making sure those numbers work for you. Is that fair to say?
Very much so. Very much so. Yeah. I mean, like I said, 2, 3 years ago when the real estate market was rocking, people were overpaying, but rents were going crazy in places like Texas, Florida, Georgia, Atlanta, Georgia. Rents were increasing 8 to 10% a year. And so it's hard to lose money when your rents are going up that fast and demand is so high. Now it's a different game, right? And so again, you got to make sure it pencils out. And those are harder to find now because we're not getting the rent increases and the demand isn't quite there yet.
With your experience so far, would you mind sharing what your biggest lesson learned?
The biggest lesson learned in real estate, again, it's unpredictable. And I already went over this, is that there's something that's going to happen in a deal that's going to throw you for a loop. And so you have to be prepared. It's not all roses and wonderful. And I'm sure someday there'll come a deal that is that way. And there's probably several I'll be involved in that will go really smooth and just like you planned, but don't expect it.
Yeah, I've even seen that being the case on fix and flips and everything else. It's just like
Yeah.
you get a lot of hype around these HGTV shows and they think that it's all fine dandy and you can get some of this done in 30 minutes and it's just hard lessons to learn.
Yeah. And again, I also think that if you're going to go in, be involved, just, you talked about numbers, diversify, get in multiple deals. Don't go, oh my God, this deal looks great. I have this much in my retirement. I'm going to put it all in that deal. Spread it out a little bit. Some are going to do really well. Some are not going to do as well. And if you diversify a little bit, that's one thing that we are told is to diversify our investments, but, do it more than just different stocks or different mutual funds. Get involved in real estate and multiple real estate deals. Spread your money out.
Yeah. What is they say? Cost average. Like there is going to be a benefit of spreading that out. And depending on the operator, things are going to be different. It's kind of interesting that you focus on being able to add value to the property and increased forced appreciation in that way. Those are particularly the type of deals that you're looking for and type of operators.
Number one is make sure it's in a good area. You got to make sure it's in a good area and there's some good income around there and job growth and stuff like that. So you're in demand. And then, you can find a place that's been, what's the distress find a deal that has some distress, right? And then can you solve that? You can't solve a bad location. You can't pick up an apartment complex and move it, and you can't clean out the neighborhood around it, right? So you got to be in a good area. But what is the stress? I mean, the one deal I was looking at had been owned by a trust for 20 some years, and the people that ran it, they didn't know anything about real estate. It just kind of ran itself and was barely managed. There's a lot of potential here. Yeah, I was pretty excited, but unfortunately didn't get the deal. Or is the distress the physical? Hey, we got a good location. There's apartments around us that are really nice. This place hasn't been fixed up. And so it doesn't make as much money because the rents are lower, because people aren't going to pay as much because the place across the street's got a pool and it's a little nicer. Well, there's some distress. You go in there, fix it up, make it like the places next door, and you'll be able to basically copy them, get what they're getting, and that'll add the value. So find a place that's got some distress.
Well, Blaine, this is just a very, very interesting conversation. I want to point everybody to your calculator, CanIRetireCalculator.com. That's going to be a clickable link in the show notes. But before we jump into the rapid fire and close out this episode, is there anything we should have tried to hit on?
I mean, like I said, I'm here to help people. And, I got to tell my little story, and hopefully that made some of you guys out there think and go, my gosh, I haven't even looked at my retirement in 15 years, but where am I? What's going on here?
We're
And,
not supposed to.
right. Yeah, I mean, you asked me some great questions and touched on just the basic stuff that people need to know. I just encourage everybody to, if you're thinking about it, go get involved. You got to do something, because so many people sit on the sidelines, and there's a lot of risk in doing nothing as well as doing something, right? So you sit there and do nothing for 10 years. Well, you're definitely going to get nothing, right? So get out there and do something.
Well, if you're ready, Blaine will jump into the rapid fire and close out this episode.
All right.
If you could go back in time and give your younger self a piece of advice, what would it be?
Number one, get a mentor, because mentors can take years off your progress in your journey. When I started real estate, I was doing it after reading one book and listening to my buddy, and it just didn't work out. And here I'm 25 years later going, now I'm starting to work on this. And where would I have been if I had got a mentor like I have now 20 years ago? It'd have been a whole different story.
Was that any kind of mindset shift to invest in your real estate education?
No, it wasn't, because I've been doing it in dentistry for years. My buddy who's in this deal with me, we were a few years out of dental school, and we started going to conferences and seminars all across the country to make ourselves better at dentistry. And so I've always had the mindset of, man, you got to invest in yourself in order to provide and help others out. And so knowing that was the same mindset in real estate.
What lie do real estate investors often tell themselves?
Well, the one thing that comes to mind is that you always hear, you make the money when you buy the property. That's where it is. You make the money when you buy the property, because you got, if you get a good deal, you can sell it. Well, there's some truth to that. But if you don't have a plan and you don't manage it well, you can buy a property for near to nothing, and it'll be worth less than that when you try to sell it. So don't believe it's all in the buy. The buy is the start, and there's a lot of work that needs to be done after that to make that deal successful.
Do you have a book recommendation?
One of my favorite books for somebody who's getting involved, and you guys who are interested, is by Brian Burke. It's called The Hands-Off Investor. And it talks all about apartment deals and things called syndications, which is a group of people that are put together to purchase a property. The information there is fantastic. You'll learn a ton about how to be a passive investor and what goes into making these deals successful.
And finally, what strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
Well, I talked a little bit about a mentor, but I probably shouldn't use that one again.
That?
Because that's the biggest time saver there is. Finding a mentor, and you become the 5 people you spend the most time with. So if you want to get involved in real estate, you got to get yourself around people who are doing it and are successful at it. A lot of these seminars I go to, there's guys who have hundreds of millions of dollars of property. And if you get 10 minutes of their time to talk to them, and most of these people are just grateful and they love chatting. I mean, you can get so many pearls from something like that. So surround yourself with the people who are doing what you want to do, and that'll move you forward quickly.
Well, Blaine, I really appreciate your time here today. CanIRetireCalculator.com. That's going to be a clickable link in the show notes. Really appreciate your time. I hope you'll consider coming back again sometime.
No, it was fantastic. I appreciate you too. And like I said, I'm here to help people. So let me know how I can help.